The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we got a little bit of a bounce on Thursday with a lower U.S. dollar index. That seemed to help give commodities, livestock, a little bit of room to run. The wheat markets in particular taking advantage. Quart of beans, a little bit mixed at the close. Livestock trade looked pretty good as well. After a few days in a row of lower action in the markets, it was nice to see some green on the screen Thursday. Let's talk about it. Joining us now for market analysis, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to talk with you, and hope you had a great 4th of July, and I'm sure coming back from the holiday, oh man, a couple days in a row, these markets have been kind of depressing to look at, but like I mentioned, we got a bit of a bounce on Thursday, and we'll take some green on the screen here in what's been a kind of a dreary week.
Yeah, we'll take some green for sure. You're right. We came back from the 4th and it was just terrible on the 8th. It was just a really rough session and big sell off. And to kind of put things in perspective, the quarterly stocks and acreage reports, those were out on the 28th. September corn futures had a low that day, 399.5, finished at 407.5. Today finished at $4.25. So we're about 7 cents from the close on the day of the 28th. And that, considering that you got a really good rain system that pushed through the central and eastern corn belt, or much of the corn belt, I should say, from the hurricane, that certainly, it doesn't look great, but it's not just a complete bludgeoning either. The funds have gone very managed money is very short in the grain markets again, and to maybe their point, they just don't see what I'm going to call a threatening forecast that would just have one really think about, boy, it's going to get so terribly hot and dry. Now, if you're in North Carolina or somewhere and you keep missing these rains and your crops are really ready to pour, not a lot of relief, but the central Midwest, you look at the drought monitor map, it's pretty clear and clean, and where it's been wet, certainly some ideas that bean crop can come along, but it won't be the crop it could have been. But I don't think it's stepping backwards this week either.
Well, as we think about these grain markets too, I'd love your perspective, looking at things like stochastics and some of those other indicators. It's kind of felt like these grain markets have gotten a little oversold the last few sessions. And so maybe we were due for a bounce Thursday, but then all of this ahead of a USDA WASDE report on Friday that's going to factor in the new stocks and acreage numbers. I mean, what are some of these technical indicators telling you in corn, soybeans, et cetera, Brian?
Yeah, so we had some, kind of an interesting indicator today. We did a crossover in stochastics. So now that's an indicator that, and you can use different measurements in stochastics, but it has a slow moving average and a fast moving average. They cross over, they can give a buy signal. And we've been in the oversold territory for quite some time, since at least the mid part of June. So you have to be a little careful reading too much into those tea leaves. If you're consistently oversold, it means you're in a downtrend. Probably the biggest issue on the bean complex, having such a tough struggle this week and losing 50 plus cents, is just we're just not picking up the export business. Brazil captured, by some accounts, a little over 120 million bushels worth of sales, and the U.S. got sort of a little dabble, at least in a morning sale that's announced. Export sales continue to be slow. So that's been an Achilles heel. You really don't have a weather threat. You've got a technical trade that moves in a downward fashion. So you start piling these things on. And then, of course, in the corn in particular, you got the stocks and acreage report, which added fuel to the fire. And then all this talk about farmers holding a lot of inventory yet, which the quarterly stocks report said. And that's probably more of a function, I would think, a little bit more of a function of probably high test weight last year. And so you just have a little more corn on hand. So it's been a pretty rough week in the grains, but they seem to have consolidated here the last couple of days. We like the green on the screen. Wheat finished about a dime higher. There's some, I don't know where it sits right as we speak, about Ukraine and Russia, and some flare up there with apparently a captured ship, I think. But Jesse, it's just they're just, it's not that there was new negative news. It's just that there wasn't really new positive news.
Well, and to your point, it's a very simplistic, crude way of saying this, I think, is that we have a lot of supply. The trade is expecting to add to that supply with current crop conditions. And then to your point about exports, we just don't have enough demand. It's all this supply, not enough demand. And when that's the case, these markets really have nowhere to go but down, it kind of feels like. And especially the funds and some of those speculative buyers, they're continuing to drive this market to the downside until something changes, either less supply or more demand. Right, Brian?
It's that sometimes simple, right? You got to
Yeah.
have something to come along. So I've always said the market's moving on multiple things. One of them is perception. Perception's so much. Perception becomes reality, right? So right now the perception is there's ample supply. End users are rewarded over and over again by being complacent in their buying because that's worked. And usually people make changes when things either are so good that they have to recognize it or it's painful. And you got to say, okay, I got to change my way. Right now, the end user has a good opportunity, and testament to farmers doing everything they can in all these rough situations to get out there and replant and to apply nitrogen and to work at it. One question I'm starting to raise a little bit in conversation, and what I'm hearing from farmers is, with prices of corn where they're at, and even soybeans, do they want to invest in fungicide this year? I mean, that question's upon them, and do they want to add that bill to already low prices? So, those are the kind of small bricks that if farmers, in mass, just don't aggressively add fungicide, you start thinking, well, fungicide, to my understanding, has always been a yield keeper. It doesn't add yield, but if you don't apply fungicide, you can expect some lower yield. So where's the investment? Is it worth it or not? I think each farmer will have to tackle that. And in the long run, we look at things that the market has to figure out if it's bullish or not. And right, we're at best consolidated. Unfortunately, is what I'm telling you.
Well, and I think as well, Thursday, a lower dollar and that headline CPI number was the first negative one, I believe, we've gotten month over month in 4 years, I think was the stat I saw. And maybe that's not right exactly, but I mean, just with some of that economic outside news, that was helpful, but definitely not something that's going to be a long-term help, I would say, to commodities here, Brian.
Probably not. It's funny though; everything is dynamic, and that as it keeps changing. So one of the things I've learned long ago was we have to be a little careful we don't get sort of caught in our tunnel vision of where we are. So we have to recognize that things can change. So I look at things like row crop prices; they're pretty cheap right now, and it's all of a sudden you look at this and you feel overwhelmed that, are we ever going to produce a low enough supply to really, kind of kickstart this before? And we've been in these troughs before. It's just a matter of how long they last. But low prices do eventually cure low prices. But the big picture perspective is we've had some really good timely weather throughout the world the last couple of years as well. And some crops have been sort of on the brink of really train wrecks, and we don't see that. And I don't know if we'll always have that kind of luck. Genetics, tillage practices, all of those things are certainly beneficial, but you still need good weather. And then all of a sudden things change, perceptions change, and you don't have enough inventory. But right now, I guess what I'm saying is it's July 11th. The window's going to be closing pretty quick in the Midwest if we continue to see more what I'm going to call normalized type weather. I know it's going to be warm in the 6 to 10 day forecast, but you're still not looking at any, searing heat like out west and maybe out east that's going to permeate up into the Midwest and really dry out. At least I don't see that in the forecast. And I don't see, we talked a lot about El Nino switching to La Nina. It looks like that's pushed back further now. There's not any sense that it's going to happen mid to late July. So we'll have to see.
Friday's WASD report, it seems like a lot of folks are leaning to the bearish side of the boat here. Wondering your thoughts, anything key you're really going to be watching for on that report, Brian?
It's tough to say. I don't know if the USD will take a sort of a an approach and lower. When we look at crop ratings, if they use that as a guide at all, you got about 9% of the crop rate poor to very poor. That's still a pretty high number, right?
Yeah.
For this late in the season. So that's still registered a 181 yield. They might lower that just a sliver, but I would also anticipate that because of the way that the buying interest from foreign countries has been basically as needed, and we're getting a little bit tight on time, I wouldn't be surprised if we're going to see maybe a little reduction in export activity, especially for soybeans. So we grow the carryout quarterly stocks, all that gets factored into this report. So it's going to be a challenge to find a friendly surprise. I don't know where it would come. Given that, like in corn, in November of last year and in January, if you might remember, they raised the yield. I can't see it all of a sudden an adjustment to yield on last year. They were raising it late in the season. Jesse, it's kind of a tough picture right now. Intuitively, one would think, well, prices are low, demand ought to really improve. It does, but over time, it's not human nature when prices are dropping to jump in and buy hand over fist unless you really feel confident that it's going to change. You just buy as you need.
We're talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing here today on the show. Let's talk livestock, Brian. Cattle, first 3 sessions of the week, lower. Beef cutouts, lower. Cash trade, lower. I'm hearing rumblings. People are calling for a top at the cattle market, but then here we are on Thursday and we get a bounce back. So your assessment of this cattle market, are we getting a little top heavy here? Is seasonality maybe at play? What are your thoughts on cattle right now, Brian?
Yeah, so a couple things in the cattle complex. Seasonality is at play. Once you kind of get past this idea of all this purchasing for holidays, and you do have Labor Day down the road, and you got school starting up and things like that. But there's this window in here, and the futures contracts, I think, have anticipated this drawdown in cash markets due to lowering demand. Now, when you talk to people in the country, especially auction barns and things, they're not seeing any real slowdown there. But I think that's more of a function of cash today, not necessarily the futures price, which is anticipating lower values. So this is going to get really interesting because we're anticipating, it's likely we anticipate that we get that seasonal slowdown. And then, of course, with economic data, that's kind of telling us that we just don't see a new demand market developing in this cattle complex. So I'm inclined to want to believe that the board isn't necessarily right. I think it's a little low and that it's been creeping up, but I think that cash price is probably doomed to come down too, and we're likely to see some change there. Where that may change, and what we need to really think about is if this weather that's really hot, if that does permeate more into cattle country, does that affect weight gain, and do we evaporate some cattle, what I call poundage on the heat? I want to be careful not to mix typical summer weather with some sort of prolonged, but it does look like we're headed toward a warmer period here, and that usually curbs a little bit into consumer demand and weight gain. So choice cuts, select, good values, but kind of stuck where they've been for most of the year at high levels. What do we have this morning? 323 on the choice and 303 on the selects. Good spread yet there. Tells me feedlots are relatively current, but it's tough to be a bull in this environment where when you see that discrepancy, you got to think cash is going to come down.
Hogs have been trying to find some sort of support, some technical support, whatever the case may be. Good day Thursday, but I'm still a little skeptical of this hog market, Brian. What do you think?
I think we're all a little skeptical of the hog market. It had a good $2 gain in the August contract today, but it's been a very disappointing market all season in the sense that when cattle prices were rallying, hog prices weren't. And so where do we see the substitution out for pork? I just haven't seen that sort of clicking. Big picture perspective. Concerned about just, again, a little bit too much inventory. The market can't quite absorb it. I like the bounces, but I just don't come up with a bullish scenario in a market that, well, we're getting low enough for one, but we have been stuck in this downtrend after double topping in the early spring months there. We talked about that double top, and it has been down since. We did post a nice hook reversal today at new contract lows established on the August contract. but we'll have to see if it has any legs under it. It gave up $6 between Monday and today, and finally got a bounce back today to get 2.5 of those dollars back. I just don't see that market coming to life right now. At best, we can hope for back to 90 in August, but I think anything beyond that during the summer, later summer months, is not likely.
How about the dairy market trade? Any updates for us, dairy, here as we get to the middle of the month?
Yeah, a lot of volatility. Can look strong, can look weak. Some of the contracts today, I'm looking at, like September right now, posted a pretty nasty looking bearish key reversal, which just means a big outside day and a lower close. I had a nice thing going this morning. Same thing in the August contract. Last traded down 31, still trading right now. Head and shoulders formation there. It's just one of the more interesting markets that I've seen in a long time in dairy, when you have so many kind of spinning wheels right now between the herd that was reducing, and then you got your run up into the 20s on milk, got good levels to protect price. You're seeing a lot of volatility on day to day. You're seeing an export market that probably has some good wings under it. But all of that being said, I just don't know if I see any driving forces to really propel this thing upward. I think we're down. We traded sideways last fall into the winter months until early spring, made the big run up. Now we've been chopping around. I'm treating that market with a little bit more of a defensive posture than not. I think producers try and increase production, but they can only do so marginally, and it's going to have to come from the demand side. And I am a little bit concerned about the demand cycle. Inflation and those kind of sticky things, I think, just take a toll over time, and we just don't. Inflation takes tops away from markets. Strong prices.
Brian, good thoughts as always. What do you want producers across the board to take home and remember here this week?
Well, I guess what I'd like them to remember is that for this week, we're at sort of this critical junction of the year. I wouldn't, if I'm a corn producer, I wouldn't necessarily panic and just give up. We've got some opportunities, but really take a hard look at what all your tools are, and if there's any way to sort of manage those. The thing that I guess, and I don't want to browbeat anybody, but we can look backward and say, well, it was likely that if things looked good for the crop by midsummer, we probably weren't going to be at the same prices that we were in early spring. And so kind of remember just that the resiliency of farmers to go out there and replant and plant and get at it. And the Midwest has been known as the breadbasket to the world for a reason. It generally has good enough weather. So betting on weather can be a bit of a challenge as well. So stay at it would be my message. Opportunities come, they go. Keep looking for them. Leave no stone unturned. Talk to your advisor. There's opportunities, and I would still look at ways to shift risk and leave some topside open.
Well, Brian, if folks want to talk to you about some of their options, I know a couple different ways to get in touch with you there at Total Farm Marketing. How can they reach you, Brian?
Yeah, there's three basic ways. One is a simple phone call, and our number is 800-334-9779. And that would be preferred, because then I can hear your question. Shoot me an email, Brian with a Y, so BRYEN at totalfarmmarketing.com, or go to our website, totalfarmmarketing.com, and click around. We got a lot of great resources and ways to connect with us.
With that, Brian Doherty from Total Farm Marketing, always a pleasure, sir. Thanks for joining us, and we will talk to you next week.
Yes, sir. I want to thank you as well. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.